Michael Tiny Saul. Today is Saturday, April 2nd, 2011, and this video is viewer requests. These are stocks that viewers of my video and my videos and my blog have sent in and asked me to do some analysis on. Keep in mind, these are not recommendations. All they are my opinion based on the technical analysis that I'm doing on the stocks. Okay, so the first stock is RIM. Now, why is this the first stock? Well, this is the one I actually got the most requests on. I think 8 people requested to see this one. So let's look at it. You could see about a week and a little bit more than a week ago, the stock had earnings. It gapped down pretty big, and then it just kind of oscillated around its 200-day moving average the next couple of sessions. So I drew these lines in to show that this stock is coiled up and ready to move. Also had an inside day on Friday. So we can use Friday's range as a potential long trigger above the high and a short trigger below the low with a stop on the other side, right? That's how, that's the analysis that I'm seeing here. Now, some people may say, well, it broke the 200-day moving average, so it's automatically bearish. Yeah, I think the break of the 200-day is important, but look how flat the 200-day is. So, since that's kind of representing a sideways longer-term trend, I think it's more important to look at the whole range here, right? Look at the bottom of this little coil here. I think if it breaks and moves away from there, I think that's a bigger sign than just breaking the 200-day. So that's RIM. Netflix is another stock. I'm not doing these in any particular order, except I wanted to do RIM first because it had so many people asking. Now, Netflix has shown a nice bounce since this pretty sharp decline. Now, that's relative speaking, right? It's sharp considering how strong this stock had been. And if you scrunch it up, you haven't seen a real big move to the downside, right? Even this wasn't as deep as you could see, but it's recovered almost all of that, and I'm going to really be watching these highs here, 247.55. I think if we get above that, I think 250 is a chip shot for the stock, but of course, you have to have the momentum behind it, you have to have the volume behind it. Nothing's saying that it can't stall out right here and make a lower high, but to me, it's so close. It's through the 78.6% retracement. I think it makes that high and perhaps even goes a little bit higher. U.S. Steel Corporation X, I don't really see anything here. Right? It's more choppy than anything. It's definitely had some moves that you could see can get you in some trouble. Look at this break last week of the 50-day. Hey, we're clear sailing to the upside. Oh, we gap up the next day. Up. And now we gap down on Thursday. So this is too choppy for me. I don't have an opinion on this. Goldman Sachs was another popular one for people. People are asking about it. Once again, I don't see much here. I like the way that it broke the 200-day and immediately recovered. But, right now you got the 50-day coming down and you got the 100-day, the 200-day moving up. It's like a squeeze here, right? It's like a pinball play going back between the bumpers, right? Or a little ping pong match. And it's getting tighter and tighter as the moving averages are coming together. So to me, this could lead to a nice consolidation that eventually could lead to a nice move. But right now, look for intraday patterns on it. I don't really see a pattern on the daily chart. Microsoft to me, it broke the 200-day, came just shy of the 200-day, and has so far held. This to me looks more bearish than anything. So, that's the way I would be looking on this. I'd be looking for the downside to continue on this after the break and break of the 200-day and then a hold on the retest. I may even want to go down to these lows down here at 22.73. It's not a big moving stock, but that doesn't mean that it can't be traded. You don't have to sit there and only look for the stocks that are going crazy. As a matter of fact, oftentimes that can be something that you may want to avoid. All right, slow and steady, they say, wins the race. Right. All right. So Qualcomm had this rollover here back in topped out in the end of February into March and rolled over. Now it's testing the 50-day moving average. I want to see what it does from here. Okay, if it gets some confirmation to the downside, may offer a nice shorting opportunity, but can't get biased short side because we're above the 200-day. And if it clears the 50-day, well, then I would be changing my mind. John Deere on a nice move to the upside, but had this rejection here. All right, came just shy of 100. All right, and then rejected. You can see this thing has been a monster, just hit new highs again. So, I don't like looking at a stock that's hitting new highs and just go, oh, time to short it. It's a strong uptrend. I'm a big believer in following the trend. I'm a big believer that the trend is your friend until the end when it bends. So could this offer a shorting opportunity? Maybe, but to me, I'd watch what kind of pattern it sets up. Maybe it sets up a continuation pattern that wants to bring this above the 100 handle. So just something to watch there. AT&T. Okay, AT&T had this nice push to the upside here. All right, now let it form a pattern and see if there's continuation there. Potash. All right, Potash, another confusing one for me. It is above all its moving averages. I know what I call my key moving averages. So we're above them, but you could see we're right at the 78.6% retracement. So if it gets through here, then I'm looking for a retest of the highs at a minimum, if not more. But if it holds, it could be a setup for a potential trade back down to the 50-day moving average. Caterpillar, just really on a tear. Same thing as John Deere to me. I'm not in the business, I guess, is the best way to put it, in shorting these monsters. I mean, look at all the moving averages are pointing up. I mean, it has nice momentum to the upside. I'd be watching this on pullbacks for potential buying ops, unless a big, ugly news item came. But this is Caterpillar's a monster here. I'm not looking to short it. That's my opinion. And to me, it's so stretched, I'm not looking to just buy it long. I got to see a pullback. I got to see something happen in order for me to be more enthused about perhaps taking a trade on that one. And once again, this applies to a daily look, right? Intraday, things get set up for scalps or for trades, can set up all throughout the day. All right, here's General Electric. Okay, General Electric. Throw a Fibonacci grid on here, and you could see it got stuffed right at the 62% retracement, which is this gold bar, although I know, TA doesn't work. We know it's all gut and feel, right, and reading psychology books. But no, this looked like both the 50-day moving average and the 62% retracement. Both held this back for now. Looks like it could be a stealth bear flag here. Remember, we are above the 200-day. So I would use Friday's high as my worry point, right? If it got above that, I would stop looking on the short side. But as long as it stayed below Friday's high, it may offer a short side opportunity for a trade. And finally, A. Okay, we can, let's see, we'll get the Fibonacci grid out here too. And you can see that it so far it's stopping a little shy of the 78.6% retracement. Okay, but you could see that comes in at 45.75, 76. So I'm going to be watching that for a potential pivot. If it holds, watch for a potential short side trade. If it gets through it, watch for a retest of the highs. Feel free to contact me at tinymjs@gmail.com if you wish to get a request in, and I'll do these probably once a week. Thanks everybody for writing in, and look for a couple more videos this weekend. I'm going to do one analyzing some Forex pairs and crosses, and I'm also going to be doing the watch list for the week of April 4th, which looks like it may offer some really nice opportunity. That's it. Have a great weekend. I will talk to everybody again with a video, at least one video, probably two videos on Sunday.